Good morning, everybody. Thank you for that, Gino. I'll check them out today. Can you guys hear me okay? Everybody can hear me? Yes? No webcam today, guys. Good morning, Morgan. Morning, everybody. Cab, Gino, Gerard, Ringa, Walter, GWC, Ron, Morgan, John 20. Nice to see you back in here. Malcolm, Algo Trader, David H, J. Roth, Paul, Jonathan, and Zorro. Awesome. I'll have to check that out. Um, Man, Gino, I'm gonna tell you right now, one of the things I think that plagues me is two spine fusions and no foundation. So not only do I not have a solid base to grow from, I probably look like a duck out of water. So I'm gonna fix it though. I'm stubborn. Guys, welcome. Good morning. Glad to have you, Gino. Shoot 'em straight today. I'll go to the range after watching a couple videos from those guys. We'll see if they can fix me. I'm Mark, and I am going to teach you guys some patterns. We're going to learn some stuff today. We're going to have a good time. Um, it feels weird. I don't have my headphone on, and it's throwing me off. So I kind of like it, though, because it gives me a little freedom. Guys, today is Wednesday, May 22nd, and we're checking news first and foremost every day, making sure that there's nothing crazy going on in the world that's going to mess up our good time. No early news today, really all week. And then at 10 a.m., we're going to have existing home sales. If you're looking at my chart or my screen, you'll notice that existing home sales has an orange box next to it. That means that it is medium impact, which means that it may move the market. There might be somebody sitting on a wad of cash that wants to create some sort of emotional reaction to this news. It's not guaranteed, it's never guaranteed, but understanding when news is releasing gives me the opportunity to kind of sidestep the markets and go do something else for a minute, let it come back to normal before I try to trade it. 10:30 a.m. guys, crude oil inventories. If you're a crude oil trader, right at 10:30, it could go a little nuts. Just be prepared for it. And then at 2 p.m., we're going to have some FOMC meeting minutes. So these guys have been flapping their gums all week, and they're going to say what happened at 2 o'clock. One of the things on these FOMC days, guys, is there is typically huge volatility when it happens. And then there is typically a lot of indecision until it happens. When people know that that's going to come out, sometimes you'll find a market without a lot of follow through, not a lot of movement. This morning was like watching paint dry for me. Um, I didn't have any trade set up, nothing that fit my rules. So I spent 2 hours doing absolutely nothing, which is okay because I am a professional waiter. I was writing down those names, Gino. But I check this every morning. I want to make sure that I know when it's happening. I'm going to drop this link in the room. Guys, this should be on your favorites bar. This should be what you're doing every morning when you sip coffee. And then everything that I talk about is coming from the T3.com, nexgent3.com website. Two sections, really. There is a software user guide. This is your NinjaTrader how-to, guys. All the things that you need to know about NinjaTrader you're going to find here. And then the trading guide is everything that I talk about. This is, they used to call this the tutorial section. Now it's the trader guide. And what it does is everything that I talk about, rules, patterns, entries, management, market flow, everything. Um, Ron, it all comes from here, guys. I'm not going to keep any secrets from you. I'm not going to give you a little and hope you figure out the most. Guys, I'm going to give you everything that I have rattling around this cavernous head of mine, and try to make you a better trader. Try to help you recognize these patterns. And really, we're going to do that. We're going to try and turn you into a chart reader. Um, and the easiest way, look, that's the user guide. Let me go to the trading guide. The easiest way to become a chart reader. Why are we chart readers? Let's start with that. We are chart readers. Hey, good morning, Kenan. Because 90% of your day, guys, is spent reading indicators. 90% of your day is waiting for advantages. 90% of your day is not doing a darn thing. Ronzi says he spends longer than 2 hours every day doing nothing. Retirement is amazing, isn't it? I can't do nothing for 2 hours, guys. If I start doing absolutely nothing for 2 hours, I create things to do. So I find distractions when I'm waiting for advantages, whether it's playing a game on my computer or drawing a picture or texting my wife or playing with my dog, whatever. Anything other than fabricating. But chart reading is kind of the goal. Chart reading should be where you want to be. It is retired, but a bump. Got dad jokes. Guys, chart reading mastery. I love the AI stuff. When you can read your indicators, guys, and we're going to talk about these patterns that allow you to do this, you're going to understand where the market is likely to continue. That continuation point is going to be your entries. Whether it's a high probability trend trade, a momentum trade, an HVA trade, you're going to be able to pinpoint it with some pretty amazing accuracy. You're going to understand where the market is likely to go. You're going to be able to use factors like momentum and key Fibonacci areas, excuse me, and make intelligent decisions on profit taking. And then finally, you're going to understand where the market is likely to stop, guys. And these are what we call termination conditions. And a termination condition can absolutely ruin your good time. A termination condition is where the people that move the markets, the same people that react to areas, the same people that create trends, the same people that react to the news, guys. They make decisions at these likely to stop areas, and you're going to be able to identify it at a moment's notice and not make the mistake of trading directly into them. You're going to become a chart reader through some pretty simple study, guys. We're going to focus on what's called a high probability trend trade. And a high probability trade is when each indicator on every chart agrees for the trade. You're going to have the strongest triggers. You're going to have nothing in the way. You're going to have the best of the best entry, room to your profit targets. And we do this with the high probability trend trade. And the high probability trend trade is 3 rules. It's 3 rules that are designed to have you recognize and embrace advantages. I speak to myself in terms of advantages when I look at my chart. I never look at my charts and say, hey, do I have a long trade? Or, hey, is there a short trade to be had? What I do is I look at my charts and I start asking myself, do I have the advantage of momentum through rule number 1? Is my path clear? Is rule number 2 letting me know that there's nothing in my way, none of those likely to stop areas? And if so, well then let me find an entry. Let me find the best of the best spot where the market is most likely to continue so I can take advantage of the statistical advantage, guys. This high probability trend trade is a trade that you can study, that you can test, that you can go back and verify that it does in fact win more than it loses. And this is a trade that typically wins 70 to 80% of the time when you follow the rules. That's why we teach it. It creates confidence through the memory of success. And it's also a pretty simple approach to trading. It's only 3 rules. Each rule creates an advantage, and it's the 3 advantages that create a trade, guys, not anything more. It's just momentum and a clear path and an entry area. And you're going to be able to do this on only 2 charts, which is pretty cool. 2 charts is going to give you everything that you need. 2 charts is going to give you enough to know that your rules are met. And everything starts on the large chart. I'm having coffee mugs made. Large chart leads the way. Because your large chart is going to define the direction, the momentum, and the areas in the market, guys. Your large chart is going to give you everything that you need to say, hey, it's time to look for an entry. And if you allow the large chart to lead the way, then you're less likely to get fooled by the smaller, faster, the refinement chart. Because this large chart, most current bar, gives me all of this information. Your small chart is a dissection of 1 bar, the most current bar, and there's a lot of little fluctuations on here. So we're just going to use it to pinpoint where the market is most likely to continue. This is going to allow us to reduce risk. You will maximize your profit potential through this process. And we use 2 charts. I love to show this picture because each chart represents a different side of the market. The large chart represents the large crowd. The large crowd opinions of the market. The large crowd typically establishes the trend. They create the momentum that we rely on, and they react to those areas. Hey, good morning, Erla. That have the potential to stop the market. The small crowd is these guys that have a little bit of money on them, right? They're new money, and they fight sometimes. They're just nasty dispositions, and they love to push against everything that the large shark's doing. And guys, we're going to use a simple recipe to really exploit the small crowd. We're going to go with the flow of the large crowd, but we're going to rely on these guys to give us our best of the best entry, the highest probability entry for that trend trade. And then we're going to do this. I'm going to go ahead and show you guys this one. This is one of my favorite pictures. How to get to where you want to be. ASAFB, guys. Post trades in class. I can't stress this enough. Post in the room. Post everything that you see. But don't just drop a picture in and say, how's this? Don't just drop a picture in and say, hey, is this right? What I need you to do, and this is guys, I'm telling you, this is the fastest way to get to where you want to be. Take your pictures and tell me what you see. Tell me why you did what you did. Tell me what you're wondering. It doesn't have to be a trade to put it in the room, guys. It can just be a question about a line on a chart. Ah, very nice. Very nice, Cav. Oh, just 85%? That's the best you could muster? Come on, man. Great work. Guys, if you tell me why you did what you did, if you tell me where you got in and where you got out and what advantages you saw and what you were feeling even. Sometimes telling me what you're feeling lets me know where you're at. And give me the best of the best information, guys. Don't give me a blank chart and force me to make up a story about what was going on in your mind. I've been married long enough to know, don't tell you how to feel, right? So give me all the information that you can give me on that chart. Drop it in the room. And it's the equivalent of having a private session with me. I'm going to look at your chart. I'm going to discuss your read. We're going to make sure that you're reading your indicators properly. We're going to look at your entries. We're going to look at your exits. If there's a better way to do it, I'm going to give you everything I have in my arsenal to help you do it better. And that's the one part that you shouldn't ignore. Nobody in this room, promise, nobody in this room is going to find you in the grocery store and ask you what the hell you were doing with that short trade or why on earth would you trade into that termination condition, guys. It's just not going to happen. So post. Don't be shy. And then the second part of it is use your spreadsheet, guys. Every day I give you my personal spreadsheet. Every day I give you my spreadsheet. I'm doing it right now. And this is your trade journal, and this is your recognition thing, and this is everything that you could ever need to do with those pictures. And there's 4 tabs on it. The first tab is where I've stolen all the pictures from you guys. I've taken great high probability trend trades, medium probability trend trades. If you're a brand new user, simply by clicking on every link in the green section, you're going to look at 300 outstanding uses of the software, 300 pictures that look very similar to one another, and about 300 pictures that all revolve around the advantages that we teach. There's a section for the NASDAQ. There's a section on management because you have to do something with these amazing entries that you're taking. There's patterns that repeat themselves. One thing that you will find to be true the longer you spend with the software is that the market moves the same all the time. It goes up and it goes down, but it repeats these patterns over and over, and it's these patterns that help us find success. And sometimes it's these patterns that keep us out of problematic areas. And then there's a whole section dedicated to termination conditions, areas that are likely to stop the market because they do such a great thing. What time do I start in the morning, Paul? So typically, and I'm trying to wake up later, true story, I'm typically up around 5:30 every morning Central. Some days it's earlier, just depends on what time I fall asleep. And I start watching. And some days the market is like an absolute ATM and I'm getting everything that I need. And some days there's not a lot going on. But because I teach the classroom, because I'm out of the market for 3 hours during really what's probably the highest volume time, I like to try to catch that pre-market, and then I'll look at it again after. 2. Depends on what my day looks like. But if you're in front of the market at open and trading it for 2 to 3 hours, if you're patient, most days I think you're going to find that it's not too difficult to meet your goals. Most days, not always. And yeah, Rob, for me, it's always NASDAQ. Not because I think NASDAQ offers any advantages over any other market. It's just what I trade. And I don't spread myself thin. I don't follow a lot of markets, guys. I don't trade more than one market at a time. I like to give everything. Um, I like to give everything my full attention. I like to look at one market. I like to look for about 2 trades, and it either happens or it doesn't. I either have the advantages or I don't. So, um, just me. You found the last few hours for you suck. And Jen, does it have anything to do with the fact that you're tired, or maybe that you're distracted? Maybe you didn't meet your goal yet, so you're trying to make something happen, or maybe you're just bored. And yeah, you get to start early because of Europe time. It's a long day. Take a nap, Jen. Take a nap. All right, so the first page, guys, tons and tons of pictures. And then the third tab is your favorite looks. This is where you get to take pictures, all the pictures you post in the room, drop them in here. If there's a lesson on your personal setup, on management things, on patterns that repeat themselves, guys, make your section look like my section. The second tab is 101. This is a tab that I built dedicated to the rules for the high probability trend trade so that you can create recognition through the repetition of taking pictures. Man, Morgan, that's a lot. And then finally, the first page, guys, this is your tracking sheet. This is your trade journal. So I'm going to show you the picture of the first tab. The first tab is where you're going to put every trade. Every trade that you take, win, lose, or draw, guys, the good, the bad, and the ugly, put it in this spreadsheet. And then tomorrow morning, wake up, look at them, and ask yourself, what worked? And you're going to start to recognize patterns that are bringing you success. You're going to ask yourself what didn't work. And you're going to be able to find those patterns that are taking success, right? Maybe some of you jump in early, jump out late. Maybe you trade in determination conditions. If you're not sure what your thing is, guys, you got to post in the room. I'm gonna identify your thing within 5 or 6 trades. That's just what I do. You'll find that the things that feel easy follow the rules. The things that feel forced make you nervous. Are breaking rules. Cav, it depends on the day in gold. I traded gold last night and there was nothing to do. It was nothing but overrun and indecision. The night before, I think I made $1,800 in 30 minutes. So it just depends. Yes, last night was garbage, Morgan. Exactly. So that's where the market isn't good or bad, guys. Let's do this real quick. The market is not good or bad. The market either gives you your rules met or it doesn't. You are good or bad, whether you follow your rules or not. If you were watching gold last night, Morgan, you probably didn't find a lot of rules-based trades. There were a couple that got run right over, but not many at all. If you were watching it, what is today, Wednesday? Monday night, it was all you could hear is the cha-ching. Everything was smooth and flowing and beautiful. So you have to really understand your rules. And don't put it on the market to be good or bad. Your opportunities come from advantages, guys, and your advantages come from the rules of your trade that have been proven to win more than they lose. And what a great segue to go into learning rules, right? So for those of you that are kind of new with me, this classroom it's a discussion. It's always a discussion, and it's not intended to be a lecture. However, the first hour tends to be a little lectury. I'm not going to lie. The first hour, we are going to discuss the high probability trend trade. We're going to talk about each rule individually. We're going to look at pictures of the rules being met. We're going to talk about the advantages that they present to them. I'm going to talk about how to study each of these rules individually so that you can piece them together as a trade. And guys, I'm putting it on you right now. If you have a question about one of these concepts, ask me. Just raise your hand. Say, hey, Mark, stop the class, dude. We got to talk about momentum for a second. And I will, I promise. These three rules, guys, for the brand new user, turns you into a chart reader. The Pacific time. Morgan, that's rough, man. My wife and I traveled last year, and I lived in Oregon, lived in Washington State, just doing the travel thing all over. And man, it's early on the West Coast. It's so early out there, but it can be done. Can be done. You're in Washington, Jordan? I was in the Tri-Cities area for 6 months. Absolutely loved it. So it was Southeast Washington. Loved everything about it. If the winters weren't so nasty, I would consider moving there. And if my kids were there. You're on the coast. Ah, right on. Up by Canada, eh? So pretty up there. We spent my birthday a few years ago on Orca Island. I'm sure you know where that is. That was amazing. That was one of the coolest trips ever. Love that place. And it was sunny the whole time, which was amazing. All right, we're getting off track, guys. They're so pretty. Guys, 3 rules. First rule, large chart leads the way. Has to have strong triggers. What does strong triggers mean, guys? It's pretty simple. Strong triggers means that when the market is going up, when the background is green on the large chart, both the large and the small triggers need to be green. Your small triggers are the solid lines. Your large triggers are the dashed lines. And it's the separation between the two. When your small triggers break above the large triggers, when there is space between the two, I want you to visualize scissors opening. And those open scissors let me know that the odds are favorable for the market to continue up. Those open scissors are strong triggers, and strong triggers can push a market in the direction of the trend. Strong triggers can break key Fibonacci areas. Strong triggers can cover mistakes, guys. These strong triggers are the best of the best look to buy Fibonacci support on a smaller, faster chart. You're going to see tails or wicks on that large time frame. We don't trade tails or wicks, ladies and gentlemen. We use a refinement chart to pinpoint exactly where those tails are most likely to form. And in a downtrend, when the background is red on your large chart, it's going down. Go with the flow. Small triggers break below the large triggers. The space between the two, scissors are open. This lets me know that the odds are favorable for the market to continue down, that the market has the potential to break key areas, that the market is willing to cover some of the mistakes that we make as new users. And this is the best of the best time to sell Fibonacci resistance on a smaller, faster chart. It looks like a tail on the large chart, but it's really a 30-bar endeavor on the small chart, dissecting it, getting in at the best of the best. And then momentum begins to slow, guys. When one of the lines gets in, you can visually see that the scissors are closing, and maybe you have to be a little more in tune with everything. Your chart reading lets you know that all the charts agree. There may be an opportunity for a trade there. And then when the smalls get eaten up by the large, guys, when they get inside, this is what we call a weakening of the large triggers, and anything can happen up or down. So speak to yourself in terms of advantages when you look at the market, guys. Do I have odds favorable momentum? Is this a look that may break areas, that may push the market, that may cover my mistakes? Or is it a whole bunch of indecision with those anything can happen triggers? You'll find opportunity all the way down, but the best of the best opportunity for a brand new user is this look. And then as you become a chart reader, maybe it's this look. And then as you really get in tune with what the market's saying, what your indicators are saying, you may find opportunities with those anything can happen triggers. But those anything can happen triggers can create bigger retracements. When they reach Fibonacci areas, these areas are more likely to hold. And just, it's not an advantage. It's not a feel-good moment. You have to be aggressive and in tune. So we're going to open up a large chart real quick. Let's Let's see if we can find a little momentum somewhere, guys. There's some odds favorable momentum. And if I circle one of these tails, I can go back and look and see if maybe there was an entry possibility. There's momentum pushing all the way up to the areas, pushing all the way up to the areas. There's momentum pushing down until it starts bouncing off of areas, and once again, momentum pushing up. Guys, you're going to see odds favorable momentum all day long. And I want you to see this cool thing. Weak triggers, smalls are even on the wrong side, and that precedes the reversal. There's weak triggers at an area, and that's what makes it bounce. There's weak triggers at the highest pivot that starts pushing it down. Weak triggers at the lowest pivot that starts pushing it up. So it becomes pretty easy with a little bit of study, scrolling back, to simply say, man, I do believe in momentum. It does push the market, and those weak triggers pull an awful lot of confidence out of my brain. So large chart, strong triggers. Is everybody okay with that? I ask a lot, guys. Every time I cover a rule, I ask, is everybody okay with this? Does everybody understand it? Are you comfortable with that look of separation between the small and the large? If you're not, it's cool. It's all right, guys. Don't ever be shy to say, Mark, I'm just not sure, because I want to cover it all day long until you are. But once you have momentum, you will get there, Jonathan. I'm going to make sure of it. I'm as stubborn as they come. Once you have momentum, we have to make sure we're not trading into one of those likely to stop areas. We have to make sure that the termination conditions are false. Gino, you are no good at playing golf, man. I keep posting. Gino's having fun. I will catch those in the second hour. When there's no termination conditions, you're going to have room to your profit targets. And when you have room to your profit targets, guys, we're going to call it a clear path. And a clear path is outstanding. It means that there are no areas in the way between you and your target. It means that there's nothing for that large crowd to bounce off of. And the areas that we're looking for, guys, are divergence highs, divergence lows, resistance, support, yellow 1-to-1s, even a mid-band if the large triggers are a full bar away. And these lines on the large chart, I want to say it like that, these lines on the large chart are where decisions are made by the people in charge. These lines on the large chart are where the buyers are buying and where the sellers are selling and where those two forces can fight. So we're going to use our trigger lines, the same ones that establish momentum. We're going to use those trigger lines to let us know if these areas are likely to stop the market, and if they are, that's a termination condition. If they have the potential to break, which happens a lot with odds favorable momentum, or if they have broken and if they're in the rearview mirror and we're no longer concerned. So these lines on the large chart, we're just going to do a simple comparison. If price reaches Fibonacci support and the triggers remain above, this is an area that may stop the market. If price reaches Fibonacci resistance and the triggers remain below, it's an area that may stop the market. I made a little video yesterday. I want to show you the picture that I built for it. And I'm telling you, this is going to be the most simple approach you've ever seen in your life, guys. If price reaches Fibonacci resistance and the triggers remain below, no more long trades. It's a termination condition. If price reaches Fibonacci support and the triggers remain above, no more short trades. It's a termination condition. And I'm going to do this real quick, guys. The easy money is made trading from areas, not into areas. And I'm going to share this picture with you guys. The recipe never changes. It really doesn't. If price reaches an area and the triggers remain below resistance, they remain above support, it's a termination condition. And if the small triggers break through an area, in this case support, but the large triggers are lagging behind, with odds favorable momentum, the area has the potential to break. But we don't consider an area broken, guys. An area is not considered a clear path until both the small and the large triggers get to the other side of the area in question. And then the path is clear. And then we're going to look for that momentum, right? And we're going to make sure that we haven't reached the next area. And you'll be able to pinpoint exactly where that tail is most likely to form by using rule number 3 for the high probability trend trade. So there's 3 options every time you get to an area. Initially, at least for a split second, if you reach the area and the triggers are below, it's a termination condition. It may be a termination condition indefinitely for the rest of the day, or it might be a termination condition just long enough to have those small triggers smash through it. And once those small triggers smash through, but the large triggers are lagging, notice the odds favorable momentum, well, that area has the potential to break. It's not a high probability trend trade if there's an opportunity because it's not a clear path yet. But just order of operations, eventually, if it's going to break, both the small and the large are going to get to the other side of it. And if the small and the large get to the other side of resistance, well, now it's going to be considered support. Now we're going to look for odds favorable momentum, make sure it doesn't hit the next area. And if we see one of those opportunities, you'll be looking to enter that highest probability trend trade with both momentum and a clear path. So I'm going to ask once again, and let's go see if we can find some examples. Price reaches yellow 1-to-1s. The triggers are weak, it hits the area, and check it out. That was your top in crude oil this morning, was a termination condition, rule number 2. It goes all the way down to what was Fibonacci support, and the small triggers break through, but the large triggers don't. It had the potential to break with all that momentum, but it didn't. Look at the push. And then it gets straight to Fibonacci support. Guys, look at this. To the freaking tick. None of the triggers break, and look at the push that goes up. So if you scroll back just a little bit, you are going, oh no, I think I just scrolled my chart into oblivion and killed it. Dagnabbit. If you scroll back on your large chart and you look at these areas and you look at how the market reacts to them, what you're going to do is you're going to build an awful lot of trust in the idea that it's not a good idea to trade into these areas. So this next picture is my favorite reminder that 90% of your day is spent reading indicators, that 90% of your day is waiting for advantages, really that 90% of your day is doing not a darn thing because there's just nothing to do. And I'm going to show you what I mean. We'll start all the way over here. Weak triggers and the market reverses from the middle of nowhere. But it gives odds favorable with the potential to break, and sure enough, there may have been a trade there. I know because there was a tail. I still have to check it on a small chart. All that momentum carries it up. and it seems to turn from nowhere. And we're going to talk about how to recognize on a smaller, faster chart. And then the market starts screaming down with momentum. And look at that. Look at how it smashes through momentum, or through support. Guys, right here you had to say, and this is hard to do sometimes, right here you had to say it's a term, no trade, because the triggers remained above. Eventually, small and large get below, and you're like, yes, it cleared, I'm doing great. And then we hit those darn 1-to-1s, guys. And when you hit the darn 1-to-1s, you have to ask yourself, where are my triggers? Well, all the triggers remain above support. And those 1-to-1s are support. So all of you guys that have sat in my class, all of you guys that have studied this look, all of you guys that believe in termination conditions said to yourself, you know what? I'm not going to go short into this area. I'm not going to hope that this area breaks. What I'm going to do is I'm going to sit on my hands. And I'm going to do absolutely nothing and wait for the reaction because that's where my advantage lies. And what happens is, whoops, hey Ninja Trader, from the area, look at the bounce that comes off of the area. The market absolutely rifles to the upside, and when it does, it goes straight into Fibonacci resistance. And all the triggers remain below, which tells me without question this is an area that may stop the market. It might, it could. It's not guaranteed, but there certainly is a chance that it may. So I'm not going long yet. Even with the great bottom there, even with that termination, it's just too soon. Sorry guys, I'm trying to reload a little bit. And then it pushes all the way down here. And I realize, man, my small triggers are up and my large triggers are down. I don't even have rule number 1 met. Maybe there's nothing to do. And then 2 more hits off resistance with all the triggers below, and still no odds favorable momentum in a clear path. And then it reaches the mid band, and when it hits the mid band, the large triggers remain a full bar away. This is exactly what it looks like when your mid band is a termination condition. There is a gap, a full bar gap back to your large triggers, and that says don't trade into a mid band. Well, and then it pushes all the way back, and it's that 50-50 look, and the mid-band's a termination, and you're just like, son of a gun, it's been 45 minutes, and there hasn't been a trade. And guys, this is your 90%. And then something special happens. Small and large get above resistance, and now it's behaving as support, and my path is clear. And the smalls are outside of the large triggers, and I'm thinking to myself, oh my gosh, that's momentum and a clear path. Let me take just a minute and pinpoint exactly where the market is most likely to continue. Let me enter this highest probability trend trade, and let me take that momentum right to the next key area. If you can, right now in the very beginning, develop the patience to do absolutely nothing when there's nothing to do, guys, you're going to be able to capitalize on the profits from this trade. If you let go of $1,000 over here, forming opinions, well then by the time you reach the promised land up here, you're still down $500,000. And you'll find that the difference between very successful traders, in my experience, and traders that struggle to turn a profit, traders that find themselves in a break-even existence all the time, is nothing more than an ability to not take trades when there is not a statistical advantage, to not take trades when the rules aren't met. So you've got to know your rules. You've got to adhere to your rules. You've got to understand what your rules are so that you can sit still when it's time to sit still, and that you can really hop on it when it's time to hop on it. So is everybody cool? Once again, I'm going to ask, guys, the recipe's easy. It never changes for termination conditions. If price reaches the area, here they are at highs. Triggers remain below. I don't care what the line is. Price reaches a line, triggers below. Gosh, just sit on your hands, do nothing. Wait and see what the reaction is. If they hit a line below you and the triggers remain above, sit on your hands, wait for the reaction is. Sometimes they're going to dance in between areas. This is, I believe it was Gerard pointed out yesterday, a wedge pattern. I'm not familiar with a wedge pattern. I wasn't until yesterday. I am a little bit now. Thanks, Gerard. But rule number 2 is going to help you identify these wedge patterns. Rule number 2, through not having a clear path, is going to help you recognize when there's consolidation. So, Gerard, you did one of the coolest things I think ever, and I really do get excited when this happens, is you can take a technical pattern that so many people look at, right? And you don't have to draw lines. The lines are there. You just need that simple rule number 2 to stay out of the consolidation. Support everywhere. Triggers remain above. Guys, just don't do it. Sit on your hands. Do nothing. And these are the first 2 rules. These are the first 2 advantages. Insisting on momentum in a clear path pays huge dividends. Momentum in a clear path. Yes, Dimitri, they are dynamic Renko bars instead of the tick bars. They really smooth the look out a lot, is what I find. And I'm going to tell you, Dimitri, I'm pretty ignorant beyond Nexgen. I've done a little bit of study. I do understand open, high, low, closed bars. Isn't that easy, Paul? It's almost too simple. If price reaches support, let's go to the live market. And I'm telling you, it's embarrassing for me some days how often I don't believe it. If price reaches 1-to-1s and the triggers don't break, it says don't go long, right? And it saves me from a loser. And then if price reaches Fibonacci support and the triggers stay above, it says don't go short. And it saves me from a loser. And it saves me from a loser, right? So if I know that these are problematic areas and I'm insisting on momentum, then there's probably opportunities with the potential to break. There's probably opportunities trading from the termination conditions. And the easy money is made in between them. and consolidation happens in between them. And you just have to, honestly, and I hate to say this, Paul, I think that you have to trade into them enough to believe it, if that makes sense. My biggest challenge as a new user was breaking rule number two. Good. He gets on my case too when I do it. And this was my biggest challenge, Mr. Flowers. I gotta tell you, I traded into termination conditions. I traded into every freaking line on the chart that I could find because I hoped that it would break. I wished that it would break. I wanted it to break. And I had absolutely no idea that I was doing it. I thought I was taking the perfect trades, guys. I really did. I'm like, I'm such a badass and the market sucks because it keeps stopping me out of these beautiful trades. And then I did this. I started posting in the room. And guys, you have to understand, I started with the software 3.5 years ago, and my brother taught the room. And I was terrified to post trades in his room because what if I was wrong, right? Then everybody would know that Novak couldn't do it. Everybody would know that the younger brother, the guy that wrote the software with that last name, isn't the best trader in the world 3 weeks into trying to become a trader. And I avoided it. I didn't post in the room and I never took pictures and I really just hoped to do well. Eventually, I started posting. And the result of that was my brother saying, and the guys, this is a quote, dude, how many times are you going to trade into those areas hoping they break for you? Go take some pictures. I was like, and it still rings in my head. And guys, I took so many pictures. Good morning, Miss Debbie. Of termination conditions. Mr. Flowers, I stopped trading into them until I got lazy or created opinions, and then I still traded into them, and it doesn't serve me. But you've got to break these rules a little bit, guys, to understand and to start to believe how much value they have in your trading. So far, guys, the large chart has said up, right? And the large chart has given us momentum, and the large chart has defined the areas, whether they're problematic or not. So now we have to come to a small chart, guys. Now we have to come to that smaller, faster chart. We've got to let the small crowd do their thing. And rule number 3 says, in order to enter the highest probability trend trade, in order to have the highest chance of success, capitalizing on momentum in a clear path, we're going to use a limit order, which means that you're going to call your shots, guys. You're going to wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback. That little shove that the small crowd creates, guys, is called a pullback. It fights everything. But we're going to buy or sell that pullback at an area. So lines on the large chart could be problematic for us. Lines on the large chart could stop a trend. They could create untradeable bounces. They were these giant red flags that said, hey, pump the brakes. But on the small chart, we're going to use lines to find the best of the best entry. We're going to give the market something to bounce off of. The same way it bounces off of it as a termination condition, we're going to let it do on a smaller chart to get us into the market. But we're going to make sure that those areas are tucked inside of trigger lines, guys. So we're going to let the large chart say up. We're going to let the large chart say momentum. We're going to let the large chart define the areas and say the path is clear. And then we're going to let these yahoos push down, and we're going to take advantage of them. So we're going to use a limit order to buy or sell a pullback at an area inside of triggers. And I'm going to encourage you guys as brand new users to let them be favorable large triggers. And favorable large triggers means that on your small chart, on your entry chart, that refinement chart, your large triggers, the smooth large triggers, the same ones that are going to establish momentum, and your synthetic triggers, the stepped, slower moving, these are nothing more, guys. Your synthetic triggers on the small chart are the large triggers from the large chart. That's all they are. They're just superimposed on the small chart. But when these two are one on top of the other, when these two are like two snakes riding piggyback, and they are tight, overlapping, there is the least amount of space to put an area inside of it. And trades come from areas. So the tighter the triggers, the less risk. It's really that simple. When they begin to splay and split and fall apart, guys, you may have areas up here and areas down here, and you just don't know. you just don't know which one it's going to go to. Is it going to go to this trigger or that trigger? Is it going to go to this area or that area? It's going to decrease accuracy dramatically. It's going to increase your risk a lot. Um, because these trigger lines are moving averages, and moving averages price corrects to them. So let them be real tight, one on top of the other. And when the large chart says up, when it says strength, when the path is clear, we're not trading these tails. What you guys are going to do is you're going to use a smaller, faster chart to pinpoint areas inside of favorable large triggers, and that becomes your entry for the highest probability trend trade. And if you go back historically and circle a tail on the large chart, what happens is it should line up with that rules-based entry on the small chart. And if it does, guess what? That's your high probability trend trade. This is the look that you are burning into your mind right now. You're doing it historically, going back studying it so that you can catch it when it happens real time. So when the large chart says up and the path is clear and it's time to look for an entry, we're done with the large chart. It's already defined momentum, direction, and areas. On the small chart, you guys are going to wait for a reversal bar. And the reversal bar is just the small crowd starting to fight. It signals the beginning of a pullback. And that pullback is how we're going to get to our best entry. So the reversal bar starts the pullback. And that's not your entry, guys. We're not getting long on a reversal bar. We're just going to the next step, and the next step is to find those favorable large triggers, to find those large, to find the small, or I'm sorry, the large and the synthetic, to make sure that they're overlapping one on top of the other. And you can visually draw a box from the highest line to the lowest line of the triggers, or you could even draw a real box like the red box in the picture. And then this is where I'm going to look for areas. This is where I'm going to look for fibs, for mid bands. I'm going to look for yellow one-to-ones. Awesome, Morgan. And then from the highest point of support to the lowest point of support, maybe take, sorry, the dog's playing. This is your window of opportunity, guys. This is where the market is most likely to continue. She thinks I'm playing fetch, but I'm trying to keep her out of here. This is your entry for the highest probability trend trade, guys. This is your first 30 days with Nexgen. Yeah, she's excited. Best dog ever. This is what we're working on. Would I be worried to get into this one right here, Morgan? Are we asking about this picture that we're looking at right now? And here's the cool thing. I don't ever get worried, Morgan. I don't ever get worried. Do you know why? Because worry comes from opinion. And an opinion has absolutely nothing to do with my rules. So we'll talk about this. And what it does is the question that you ask goes into stop placement. But let me finish this real quick. Reversal bar, find your triggers, define your areas, get a limit order at the top of that window, Morgan, because there's odds favorable momentum on the large chart. Because there's a clear path on the large chart, guys. This is your entry for the absolute highest probability trend trade that you can take, the trade that typically wins 70 to 80% of the time when you follow the rules, the one that creates an awful lot of confidence. And you see the same thing in shorts. The reversal bar, not your entry, but it signals the beginning of the pullback. Find your triggers. It's not impact on the triggers that gets us in. We need something solid to bounce off of. So we're looking for fibs, mid bands, and yellow one-to-ones. You'll notice that there's only one line inside, right? This is where my advantage is, guys. This is where the market is most likely to continue. In the picture, it says these are outside of the window of opportunity. They're outside of the woo. They are not a part of where I expect the market to continue. This Fibonacci support, I don't expect the market to continue from there. I expect it to happen before there. So when you can define the window of opportunity, Morgan, you know where the market shouldn't go. So it's imperative for your management plan as a brand new user to understand the concept of getting in where it's most likely to continue. Your protective stop is going to go beyond that. So would I be worried if it went through there? Hell no, I'd be out of the trade, Morgan. It would hit my stop and I would take a loser. And I'm going to tell you guys right now, losers are a normal part of a positive equity curve. Losers happen every day. Losers aren't anything to be ashamed of or worried about or despondent about. But check it out, guys. Take the right losers. Take the losers that had momentum, a clear path, and an entry. Take the losers on the patterns that have been proven to win 70 to 80% of the time. Take the correct losers. Focus on the execution rather than the result. And what you're going to find is that if you take this high probability trend trade, this high probability trend trade 100 times, you're going to lose 20 to 30 of them. It's okay. That's your initial stop placement, 4 to 5 ticks beyond the window of opportunity. And Malcolm asks, what are these? Do we worry about these or only the big triggers? Let me see. All right. So Malcolm, I'm going to back it up. Great question. Thank you for asking. On your small chart, let's draw a little diagram, and I'll give it to you to put in your spreadsheet. Where's my snagit? There it is. So I'm going to do this. This is the large trigger. This is native to the 5-1. It will be used with the smalls to determine momentum. It's the smooth large trigger. All right, we'll do this one here. Okay. So this is the synthetic, the large from the large chart. So you're good with that part, right? That one is native, one is the time frame. I just want to make sure, because I want to go through this, because this is important. Do you see that look where they oversect? Or intersect, oversect, overcross, cross. I'm just making up words right now because really it's my classroom, I can do that. So Malcolm, what we're doing and what just 27 years has told us is that when they overlap, we're looking for the areas inside. And this is where the market is most likely to continue. So we do worry, well, we don't worry about them. We want them one on top of the other. Because what these are is moving averages. And in moving averages, price tends to correct to moving averages. I want you to look on the large chart. Price pulls away from the triggers and it pulls back to the triggers, and it pulls away from the triggers and it pulls back to the triggers. And this happens all day long. Yeah, no worries. So we use this for entry on a smaller, faster chart. What we can do, let's see if this one was a good opportunity, is when everything says down and everything is solid, the closer these triggers are to one another, the tighter that window becomes. And I want you to see where the top of that tail was formed. Right there at the mid-band, right inside of the synthetic triggers. So I expect price to come back to the triggers. It's a moving average. And when, this is kind of a cool example. When they begin to split, notice that there's a line inside of the large triggers, and notice that there's lines inside of the small. When they split, that's where that indecision comes in for the new user. Do I go off of the bottom here? Do I go off of the top there? No, man, you're good. This is such a good question. But check this out, where they're totally overlapped. Look at how small and concise it is. This offers totally minimal risk. This gives you the least amount of indecision. This, when they begin to separate and splay, that is when you're like, shit, I don't know which one it's going to be. And there's a little bit of indecision that goes with it. So we use them. Where's my thing? So we use them together. We let them kind of run together. So in your picture, and this may be me being too literal, over here, I'm not worried about them so much. I'm already in this trade and trucking. We're going to bury the areas inside of them. We're going to look for that overlapping and going. So, man, that's an awesome question. These are the things that I appreciate you guys asking because it really does. There's probably 10 people that just went, oh, okay. And then Morgan, it goes back to when you understand where the market should continue, you understand where the market shouldn't go. And this is your first stop, guys, and your stop's going to get hit every day. But if you're following the rules, it's going to get hit less often. You're going to catch a bar in the direction of your trade more often than a stop out. And this is your second stop movement, guys. You're going to put a stop a tick or two above that bar or a tick or two below that bar. And what this does for you is even on trades that don't work, even on trades that are that cost of doing business, when you get a reversal bar off the area inside of favorable large triggers, you're risking 3 or 4 ticks. And if that trade doesn't work, guys, it's pretty easy to lose $50 and not feel bad about it, especially when you're making 200 to 300 every trade. So, 10 a.m. Eastern news, Andy? I thought we had 10:30. I thought there was 9 a.m. Now you got me worried. Oh, there it is. Existing home sales. Thanks for that. 5 minutes. Man, I was backwards. I was thinking of yesterday. Appreciate that. Man, we all learn from asking questions. So the goal initially, guys, is start recognizing momentum. And when you recognize momentum and you see that there's one of those tails, go back and circle it. And see how often it pulls back to support or resistance inside of favorable large triggers. This is developing trust, guys. You should be taking these pictures and dropping them into your spreadsheet, right? So here's Gary's perfect high probability trend trade long. Notice that it's odds favorable momentum, and it's a clear path, and it's a pullback directly to support inside of favorable large triggers. This is the look I want you guys burning into your brain, because if you do it when the market isn't moving, if you take these pictures and you start recognizing, hold on, what does a perfect high probability trend trade look like? It looks like odds favorable momentum and a clear path and a perfect pullback right to support inside of favorable large triggers. Well, then when you get to the live market and everything is moving, you can say to yourself, hold it, I don't have momentum or a clear path. Let me sit on my hands and do not a darn thing. Or you may say that the path never was clear here. And those divergences told me, stop taking trades, Mark, because you're losing momentum and you're going through. So the more you commit to memory when the market isn't moving, the more scrolling back, the more circling tails. Remember, we don't trade tails. We've never traded tails. What we trade is pullbacks to areas inside of favorable large triggers. But you can use those tails historically. Guys, you have so many workspaces in your NinjaTrader. And you can go back and circle these tails, and you can see, were there opportunities that day? Did I miss a trade? Can I take pictures? Can I annotate the chart? Start committing these looks to memory, and they will become easy. And the fastest way to do it, this is where we go into the AM gift giving, is this right here, guys. I created this about probably a month ago. And what this is the easiest way. Whoops. The easiest way for you to get good at these very simple concepts, the easiest way for you to take these ideas of momentum and a clear path and commit them to memory and make them easy to recognize. So to get to where you want to be, I'm about to give you guys a bunch of stuff in the room. You have to recognize these looks quickly. So I'm going to put this challenge on you right now. If you're brand new, do this. If you're not where you want to be, do this. If you find yourself with indecision before pulling the trigger, do this. But I'm going to tell you as well, that traders are some of the laziest people I've ever met in my life. Not you guys. You guys are amazing. Don't be like those other guys. But we don't want to do work. I bought software. I'm entitled to $1 million a year. I bought software. Every trade should work out. I bought software. I rented software. I'm on a demo. I shouldn't have to do any damn work. I already wrote the check. Guys, it doesn't work that way. You've got the greatest tool in the world in front of you. Now you're learning to use it. I know, right, Morgan? If it did, I sure as hell wouldn't be sitting here. I'd be on a private island somewhere. So take pictures of strong triggers, guys. Commit them to memory. Take 25 and drop them into this 101 section until you never miss long triggers in the moment or strong triggers in the moment. And then take 25 pictures of weak triggers and a clear path and terminations and 50-50 looks. And what happens is if you take these 245 pictures, and it'll take you 4 or 5 hours to do it. Does anyone feel like if you looked at 25 pictures of strong triggers, watch this. Those are strong triggers. Those are strong triggers. Those are strong triggers. Those are strong triggers, guys. It's going to be impossible to look at a chart and say to yourself, you know what? That sure is a strong trigger look right there. You're going to say, no, it's not. This is a strong trigger look. This is a weak trigger look. And then you have to annotate your pictures, guys. You've got to take these pictures and you've got to write on them. Why are they weak triggers? Because the smalls are inside of the large. Well, what does that mean to me? That means there's a loss of momentum and anything can happen. And holy crap, I don't want to take that trade because I've lost my advantage. And guys, if you do this for everyone, annotate with the whys. Talk about the advantages. Talk about the rules it's associated to. What you're doing is you're creating this beautiful mental picture that reminds you that strong triggers and a clear path and that window of opportunity is the highest probability of success for the new users. You will piece together these looks. You will create trades, but you've got to know the looks before you're going to piece together the trade. If you try to take trades based off of half-truths, guys, you're going to get half results. So take advantage of that. If you need to check yourself, I'm going to give you the high probability trend trade checklist with pictures. Strong triggers, weak triggers, right? Termination, 50-50, clear path, window of opportunity, window of opportunity. Mike, it depends on what you're taking pictures of. That's a great question. If I'm taking pictures of strong triggers, well, then I need to take it from the large chart, right? I need to take that picture on the large chart. And if I'm taking pictures of termination conditions, also large chart. But if I'm taking pictures of the entry areas, well, then I have to shift over to that small chart. So Mike, to be honest with you, brother, is you can make your large chart this big, and you can grab your capture software or your Snagit and take that picture and watch how many different pictures there are. That's a 50-50 right there, right? That's a 50-50. This is a termination condition. That's strong triggers. That's strong triggers. I mean, in one picture with absolutely nothing going on, guys, you can fill half your freaking spreadsheet. You just got to do the work. Just do work. And use that other checklist. Use that high probability trend trade checklist with pictures to police yourself. Make sure that you really are taking pictures of strong triggers. And then I'm going to give you the same checklist with nothing on it. Guys, you can print this out and put it on your desktop. Police yourself. Write these rules on your chart if you think you're taking a high probability trend trade. Speak these rules out loud in your head as you get ready to pull the trigger. And if you do this, you're going to stop convincing yourself that you have a trade, and you're going to have to verify and validate that you have rules met. And then all of that to come together, guys, I'm going to give you the KISS plan. And the KISS plan is your stepping stone in your learning journey, guys. The KISS plan is designed to optimize your chances of success with high probability trend trades, with that 50-50, that medium probability area with the potential to break trade. But it's going to be simulation, study, class feedback, continuous practice. That's how you're going to get to where you want to be, guys. That's how you're going to become a chart reader. I'll be with you every step of the way. I'll be with you giving feedback on everything that you put in the room, making sure that you're reading your charts correctly. And then you're going to create your own plan. Let's read the AI version. You'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. I wear a gold robe when I say that. Guys, when you can read your charts, you're going to see things. When you understand the very basic concepts of the highest probability trend trade, you're going to be able to find all the opportunities that you're looking for outside of that trade. That's what I'm talking about, Morgan. Look at that little stormtrooper. Let's learn some stuff about Morgan real quick. He likes, is that the Z series? Old Z. He's into voodoo. Stormtroopers are cool. That's your car? What kind of car is that? The headlights look like old, like 240Z, but I don't think that's it. It is 300. Haha. Called it. I know my cars. Cool cars. So guys, let's become chart readers before we become day traders. Let's learn that statistical advantages, right? The easiest way to do it, don't fight your large chart, ever. Just don't bother. Whether it's termination conditions or trigger lines, don't fight the large chart. If you can commit to that from the get-go, you're going to eliminate most of the problems new traders have. You have to define your entry. It has to be your entry. You can't say, I'm going to trade like Mark, because I'm in a different place than you. You can't say, I'm going to take the Rob S trade. There is no Rob S trade unless you're Rob S. So let this be what holds you accountable. Let these rules be your rules. Don't let them be my rules or anybody else's rules. They're yours. And you have to hold yourself accountable to having these met to take the entry. And the entry is the first step, guys. We're eating an elephant here, and that's your first bite. And if you don't understand momentum and a clear path in an entry area, then you're going to have trouble with management, because there's going to be a lot of stuff that's open to interpretation. So, management, the same way entries are mechanical, management can also be mechanical. It doesn't have to be difficult. It can be a series of if-thens, and then you will craft a plan. You will, through your chart reading, create a different management plan, because you're going to begin to understand and trust momentum, because you're going to recognize change, because you're just going to be a chart reader, and chart reading is what creates great management. But the cool thing is great entries create manageable trades. So your entire management plan as a brand new user is if-then. Your entire management plan is just, it's very mechanical, and it eliminates emotion if you can follow it. And everything begins with a great entry, entering at the low point, at the window of the opportunity, and saying to yourself, with momentum and a clear path, this is my entry, hell or high water, and I'm going to put a stop where the market shouldn't go, and they're going to have to come get me. If I'm going to lose this trade, they're going to have to blow through the window of opportunity and hit my stop, because I'm not going to offer myself up right here because I'm afraid to lose a little money. I'm not going to put it just below these 1-to-1s because my stop is an arbitrary number. You're going to say, my stop goes where the market shouldn't. And if it gets hit, you're out. You're going to wait for the next trade. And if it doesn't get hit, well, with all those advantages, you're more likely to get that down bar, that bar in the trade of your direction. And then you're going to move your stop 2 ticks above that reversal bar. Or if it's a long trade, you're going to move your stop 2 ticks below that reversal bar. And then once again, you're just going to put your hands in the air. You're going to sit on them. You're going to roll back from your desk, throw the mouse across the room, and say, there is nothing for me to do until either my first target gets hit or my stop gets hit. And I'm either going to take a small loss, which is cool, or with all those advantages, it's going to smack into my first target. And your first target, new users, is $100. I'm just curious. Show of hands. Guys, use your little emoji thing. Who thinks $100 is nonsense and probably not enough money to build a trading plan around? A lot of people do. A lot of people are so put off with the idea of $100 that they refuse to take it. I have to make $200 to $300 on that contract, or it's just not even worth my time. Utter bullshit. Pardon my French. This $100 target, guys, builds confidence. This $100 target is success. This $100 target is $100 in your account, right? And if the best you do is $100 a day, one time every day, that's a $2,000 month and a $24,000 year. Exactly, Malcolm. You see $100 on the ground, you pick it up. And if you pick up $100 every day, you made 24 grand that year. If you can't make 100 a day consistently, then how are you going to get beyond that? Same, Morgan, same. So this $100 creates a lot of confidence. It's just the memory of success, guys, and it goes in the bank, and you're going to move your stop to break even because now they can't hurt you. The money's in the bank, and there's zero risk, and it makes it easier for you guys to hold for the second target, which is only $200 from your entry. Which means that if you hit the second target, guys, that's a $300 trade. And then once again, if that's the best you can do, well, that's a $1,500 week, and that's a $6,000 month and a $72,000 year. And the great thing is, guys, is it's not about hitting a home run every time. It's all about getting on base. It's all about getting on base, because if you get on base 4 times every day, that's a home run, guys. If you can make $250 a contract, that's $126,000 a year. So I want you to focus on the mechanics that produce results. I want you to focus on the idea that if you take the right entry, it creates a manageable trade. If you get paid, that's in your account. They can't take it from you. And guys, that's the goal. The goal is to get paid. So I dropped every one of these checklists in the room. I dropped the 101 drill in the room. I dropped my spreadsheet in the room. I even dropped the worksheet that I use, the PowerPoint that I use to teach this classroom in the room. So you guys have everything that I own right now. And then the second half of class is you're going to get everything up in my head. We're going to look at your charts. We're going to talk about them. And we're going to give you feedback on everything that you've seen and everything that you've done. But first, I'm going to stand up and I'm going to walk away from my computer. I'm going to stand up, run a lap, stretch. I'm going to put my hands up, wiggle my fingers, and get a drink of water. Because if you sit in front of a computer for 8 hours, guys, your brain is mush. It is mush. Don't be afraid to take a break. I'll see you guys in 5 minutes, and then we'll start analyzing charts. You did not drop the secret trade to riches? I did, Paul. Weren't you paying attention? I gave you guys the golden goose. And I'm going to go back to what Ron said. You guys now have the golden goose. Don't turn it into fried chicken. I'll be back in 5 minutes, guys. Hello, pretty girl. Hi. No strawberry? I'm excited to get back to work. Let's get back to work. So I'm going to scroll up to the very top of the chat box, guys, for the day. And I'm going to start clicking on charts, and we're going to start talking about charts, and we're all going to be better for it. So Paul got us going. Whoa, that's huge. Strong top, odds favorable, directly into a termination condition. And Paul says that, guys, this is a key part of analysis. Is I want you to notice that Paul doesn't fool himself in his analysis. Paul literally says, I have strong triggers from a good top, and I am directly into a termination condition. I know it, I understand it, I've identified it, and it's going to allow me to manage more aggressively if need be. So Paul comes to a smaller chart and he says, you know what? There's no divergence. There's strong triggers. There's a tiny little window of opportunity. Let me get into the market here and let me get back out where trouble is clearly defined. And man, this is such a huge picture. Andy, man, the outer bands have absolutely no bearing on your odds of winning. The pattern that you trade has that impact. What are outer bands? They're points of exhaustion is the easiest way to put it. So let me show you. Here's a range chart. Outer bands are just that. They're the outer bands. But it's just a range, Andy. That's all it is it's just a range. These don't help or hurt. They're just a range. That's it. The same way the mid band is just that center part. So if I get to outer bands and I have weak triggers, maybe that's a point of exhaustion. Maybe it takes away advantage a little bit. If I get divergence from an outer band, maybe I'm seeing a loss of momentum at that point of exhaustion. And that's kind of how I think of it. And sometimes the mids cause reactions, right? But Andy, it's never just one thing. So you've got to put your chart reading in play. If I have odds favorable momentum on every chart and no Fibonacci areas at all, I couldn't care less about an outer band. I'm holding that trade. If I am trading into a 50-50 and price is at an outer band and divergence is printing from that area, well, then that outer band might be a good representation of where the market may bounce. So use your whole read. And go back and study some stuff. Go look at where circle the outer bands when the market reverses at them, and then go back to your other charts and see what was going on. Absolutely, man. Great question. So guys, what Paul has shown you here is the perfect way. If you're going to break rule number 2, make sure that you have the least amount of risk possible, odds favorable momentum, and no divergence on that trade. So Paul, nicely done on that one. Once you learn your rules, guys, you're going to learn how to fudge them a little bit with confidence. But until you get those reps, you're probably going to find that it's a better idea to keep it pretty black and white in the beginning. And this is Andy. Odds favorable. It might be 50-50. It's almost a clear path there. Tons of momentum, no divergence, and it just doesn't get to the fib, to the area. So you said, well, hell, I'll get in here. I still know where my stop goes. And you ride that momentum all the way down to the areas. Nicely done, Andy. Guys, if you don't get your entry and you get in late, your stop still has to go where the market shouldn't go, right? Once there's a reversal bar, you can adjust it. And this is just a calculated thing. Andy, if it had come up to the fib, maybe it fluctuated and went and hit it, would you have stayed in the trade? And I hope the answer is yes, but that's the only thing you have to think about. If you're going to jump in here, you have to know where the stop goes. And it goes where the market shouldn't until you get that bar in the direction. Andy, great trade. Nicely done. And who's next? Gino. Gino's putting on a clinic today. This is why my stuff was so big, because Gino hates my eyeballs. Are you still with us, Gino, or did you go golfing? And I'm going to open both of them so that we can hit both of them here. That's pretty good. Momentum trade. Put a sell stop a couple ticks below trouble. There you go. Strong selling on 3 charts. Got stopped out on 2 of 4 contracts. Rode the elevator down and close it out on the pullback. Nice profit. Find gold to generally be a tough one. I agree. I think gold is a colossal pain in the ass. But it was the only game in town at the time. Gino, I hope you're with me, because I really do. I like everything about this trade, but I want to show you a little trick to not lose 2 of those 4. So the momentum trade, guys, when everything is strong, when areas are breaking, if you're anticipating that breakout, letting price get through, letting the small triggers get through on the small chart, and then selling the pullback right there to the fib, guys. This is how Nexgen teaches it. There's rules for this. Letting it break and then selling this pullback right here. And what does that mean? That means that you risk it not pulling back. But it seems rare that it doesn't. And what happens is you end up with this minimal little bit of risk. You don't get stopped out of the first 2, and you get to ride that wave of momentum down. So maybe you'll check this out on YouTube, Gino. If not, I'll send it to you. You're probably out golfing. I'm jealous. But for everybody looking to take these momentum style trades, let the small triggers get through. Let price get through and sell that snapback. Trade from the area, right? And then write it down. Current mark talking to future Gino, exactly. And then on the next one, that's the large, actually I think that's just the large chart look of what it was. And look at where the stop is, guys. That's it right there. That was the actual sell. And then that's the one that ran down forever. So good stuff. Great lesson there, guys. That's a momentum trade. Or that's the momentum look. So let it break, sell the snapback. Let it break, sell the snapback. And then I made this picture in reference to Paul's. Did I miss your picture? Yeah, I did. Sorry. I want to talk about this. So we're going to look at this one first. Great bottom, odds favorable, 50-50, and stacked area entered with buy stop limit due to divergence. Where did you put your buy stop limit, Paul? I guess that's my question. I think you found a new toy and you might be abusing it a little bit. Why would you put a buy stop 1, 2, 3, 4, 5, 6 bars into it? On the right side of the triggers? And I'm just curious, because I know that there was some method to your madness there. Man, if I'm going to put a buy stop in, if I'm saying I need the market to tell me that it was going, right? No, it wasn't. The native reversal bar marker was right there, where that one became a bar. This is your 13.2 reversal bar marker. This gold one is your native. So that may have just been, and that makes sense, right? There we go. Using the wrong reversal bar marker. Yeah, no worries. So it'll be where the most current bar. So see how, and I don't know that I have my 13.2 reversal bar marker on here. This is where this bar becomes a down bar, but 74 up here is where this becomes an up bar. So if I were going to need a reversal bar on the small chart, it would have to be right there. Good stuff. That makes sense, though. That makes more sense. I was like, why did he get in all the way up here? So much so that it prompted me to make this one. And this is a good lesson for you guys that When I talk about entries, guys, great entries create manageable trades. When I talk about trusting the window of opportunity, doing the study until it becomes easy for you, guys, if you get in early, fear of missing out, right? Oh no, the fluctuation got me in. I'm in all the way up here. Your stop is still way down here, guys. And the only thing that this guarantees, if it's a loser, is that it's a giant loser. And the distance to the profit target is reduced drastically. So it's normal as a brand new user to see that fluctuation on the 5-1 chart to jump in early, but you have to go back and annotate and say, this is my entry. And then when you get in way over here, maybe a reversal bar marker misunderstanding, that makes so much sense. All you've done is you've increased your risk again, and you've shortened your profit target, guys. And this is the fear of getting run over. I don't have the confidence in the methodology to buy the market on the way down. I don't have the confidence to get in at the highest point and put my stop here. So I'm going to let it go up, right? I'm going to let it go up, and I'm going to jump in way up here, because then there's absolutely no way anything bad can happen to me. And guys, when you jump in way up here and things change, you don't have any room to manage it. So focus on those entries, guys. Focus on those high probability, best of the best entries, and give yourself the most manageable trade. Give yourself the most wiggle room if something goes wrong. Give yourself the lowest risk and the highest room to the profit target. And guys, that's what's going to pay dividends long term. Can you imagine giving, I don't know, what, 6 ticks away every crude trade? I want you to see this. Let's calculate real quick, guys. And Paul, I'm sorry that it feels like I'm going after yours here. If I give 6 ticks away, $60 on a trade from a bad entry or for elevated risk or something, and I do that every day, and I do that for a month, and I do that for a year, can you guys imagine giving away $14,000 a year on 6 ticks? And that's kind of how things begin to compound. And this is one of the things about trading, is precision pays dividends. Precision pays dividends. And you guys have a methodology that puts you in at the absolute best of the best spot. Take advantage of it. It takes a little trust. It takes developing trust, without a doubt. And then Gino, gap theory. Gino says when price accelerates away from the large triggers, a full bar, hits an area from a bad top, he's like, man, I might be able to close that gap. And you did it, Gino. Nice done. A little more aggressive, but divergence from a 1-to-1 is just a little confirmation that that's a solid move. I like it. All right, scrolling down. Who's next? I need you guys to post some mistakes. I feel like beating people up, and nobody's letting me. Everybody's trading well, creating good lessons. I'm so full of rage today. Gino, when everything is up and strong, you make money. How easy is that? It's a momentum / prayer trade. I love that, the prayer trade. Strong bottom, entry near a handle. I don't know what a handle is, but I sure do know that this is an area of support inside of favorable large triggers. Thanks, Paul. And Gino's out on the range. All right, guys, I need help with this. That was a strong bottom, right? That was a termination that created a reversal in the market. And that is the small above the large. And that is a clear path. And just bless my soul, that's a mid-band right inside of triggers. And that was at 77.85. Can you guys give me a Y in the room if you see what I just picked apart on this trade? Termination reverses the market. Momentum, clear path, pull back to support inside of favorable large triggers. The difference between the rules-based high probability trend trade entry and Gino's entry, and there's nothing wrong with Gino's entry, is $150. Or $200 on the second entry. Which means that on these 4 contracts, just getting in at the right spot, by the time he gets to his entry, it's $600 in profit. This is a great lesson, guys. I love all of you people that are looking for momentum trades, but most of you are doing it at the cost of missing high probability trend trades. You're missing the best of the best, waiting for the let me just ride momentum in the direction of the trade. Guys, this is it. That's the money maker. That's the one that makes children sing songs about you. Jen knows it. Beautiful, Jen. What a difference. What a difference. And that's okay. If trend trades aren't yours, that's cool. Morgan, 41% divergence aside, does the fact that the 91% divergence is the same price as the 50-50 still kill the rules on the 50-50 trade? Whew. Morgan. All right. I'm going to teach these numbers the way they were taught to me. You ready? I'm going to let these numbers represent pregnancy. The number means pregnant. No number means not, okay? I'm not 6% pregnant, I'm pregnant. I'm not 53% pregnant or 17 or 51 or 24 or 90 or 41. Either am or I'm not. And Morgan, this pulled so much worry out of my head. The number is a byproduct of the calculation. That's all it is. It has zero regards to strength or anything like that. So if this is a 50-50 trade, right, and there's a divergence, if I'm trading the KISS plan, this isn't my entry. If I have the repetitions and know that it's a strong top and one divergence doesn't kill it, well then maybe that's my entry. And I will never act like that isn't here. I will never act like that isn't here. Because once this magenta line prints, that's a loss of momentum. So depending on what the large chart says, I don't know how this divergence is going to affect me, but don't give them strength. It either is or it isn't. As soon as the line prints, it's divergence. It's a loss of momentum. That's all it is. Doesn't that make it easier? I think that takes a lot of the stress and worry out of it. Like your wife has never come to you and said, "Oh, Morgan, I am 73% pregnant," which means, I don't know. I don't even know what that means, right? How could that be? So here we have a 50-50. You're confused? No? Okay. So here we have a 50-50 on the divergence low, right? Are you comfortable with that? Not always, Jonathan. And then Morgan, you had no divergence, strong triggers, tiny window, dude, rock star entry. And then a divergence prints. And one divergence tells me, hey, this can be problematic. But it just goes right to the midband and bounces back down. And now I have two divergences in the exact same price range. But it's not a higher divergence, Morgan. It's the exact same. So there's a management lesson that says if it's a higher divergence, it's an exit condition. A divergence that's the same level, price reached it, man, that midband's still in play, right? It's in between triggers. You can see things happening. I don't mind the exit. I don't think the exit's a bad exit. I think, and here's a good management, and let me find it real quick. using divergence for management. And it's interesting that you did this because this is actually one of the videos I'm going to make this afternoon. This is my spreadsheet that I work off of for you guys. So if I'm long, right? I'm in a long trade, life is good, everything's going on. One divergence, who cares? A second divergence says, hey, let's get out because it could be problematic. And then here's the flip side of it. The second divergence says get out, but the large chart still says we're going long. Only with a new signal up, only with that confirmation, with that reversal bar, I'll get back in to continue the trend. And if I never get that confirmation bar, Morgan, well, then I don't take that next shot, right? I don't get messed up. So here's your short, exactly. There's your first divergence, perfect. If it's higher, it's an exit condition. If it's equal or lower, who cares? Large chart leads the way. So you're good here. And even if you exited, there's your confirmation getting back in to go with the momentum. Does that make sense? Great questions. And that goes into management a little bit. But your awesome entry made this trade really easy to manage, made it really easy to make money on. Let me show one more thing. And I think that you can use this as well. If I'm in a long, Morgan, I'm going to make videos for all of these pretty soon. Yeah, no worries. If I'm in this long right here, and I see that problem, that divergence, I might get out of it. I might say, and let's go back to your chart, I might say, you know what? I made it down to this divergence line. Let me get paid. And it looks like you did. And then I'll hold it. And if I get a reversal bar, well, shit. I'll get back in. So I love it. But if I'm going to, and get up there. Sorry, this one's kind of splayed out. One of the things that's tough to do, well, you didn't hold the second. You got out of the second one at a mid-band. And you had two more bars print after divergence was true. Divergence was true right here. Would have saved you a little money. But at this point, it depends on what the large chart says. Large chart was screaming to the downside. Was it coming from a good top? Oh my gosh, excuse me, guys. Once the second divergence printed, you were out. That's cool. It's a great trade. It just didn't run. You got paid at trouble, and you weren't willing to hold on the second one. There's nothing wrong with that, dude. I would support that plan 100%. Because you had a reason for everything that you did, right? You had a reason for everything that you did. Sometimes on a 50-50, maybe you just take them both off there and look for a re-entry. You'll grow. You'll keep seeing things that make sense all the time. And then getting in at the best spot pays dividends when momentum trades fail, guys. That loss of momentum, you have to define your loss of momentum if you're taking a momentum trade. So if I'm getting in because everything says up, when it starts saying down on the wrong side, I'm getting out. This is where getting in on the high probability trend trade creates dividends, pays dividends. JW, odds favorable, clearing the areas, everything screaming down, you get paid. Held that one maybe a little long. And I'm not sure why you went up. Oh, because you're on the momentum side of it. Jumped in on the way down, was looking to the blue fib, followed your stop down, price fell below the purchase, got stopped out, base hit for profits. JW, and Paul W, nothing but momentum. And JW is embracing two types of momentum here. Maybe this is a good lesson too. I love the lessons. I like the chart reading. You ready? Whoops. On the large chart, JW is saying odds favorable momentum, right? And on the small chart, he's also trading odds favorable momentum. But I want you to see where the bars are. If I draw a line on the trigger lines, the bars are still in the momentum phase. They're still cranking down here. When they get to the wrong side of it, that momentum is gone. For me, this is an exit. For me, that's a get out and wait for the next trade. And then what JW recognized, and man, this is quick thinking, is look where his bars are in relationship to the small triggers. He says, well, hold it. This is the momentum phase. Let me make some money. So guys, when you break it down a little bit and you say, where are the bars, right? Odds favorable momentum. There's a pullback. There's my momentum phase. I get to the wrong side. Gino, there's your snapback. Pushes up. When momentum fails, it becomes a trend trade. BC's because of anything can happen. Not even anything can happen. So Rob, on his chart, what he's doing, let's see if we can use a big chart example. Let me see if I can find a good one. Here we go. And this is a bigger, slower chart, Rob. Everything's going down, right? Odds favorable, rock star, things are great. Everything is cranking. Look at where that bar closes right before the push up. So JW's using it on a small chart. If I put a line on these small triggers, bars stay outside, start to dissect, and then when the momentum starts to go away, look which side of those triggers they get on. But it's still long-term odds favorable, and when I get here, then I'm definitely on the wrong side of everything. So he was using this idea on the smaller, faster chart, where he could say, I'm way outside of those green triggers going up. This is like the immediate, smallest chart momentum ever, and it doesn't last, right? Everything's going up. When I get to the wrong side, I see that retracement. It tries to go above and can't, and I see that retracement. And then when it finally gets back in line and heads up, it continues up as long as it's on this side of the triggers. And then I can see that loss of momentum when it gets to the other side of the small triggers. And what JW's been able to do is he's been able to formulate a plan that takes advantage of that small chart momentum phase, of that not high probability trend trade, just really capitalizing on a very momentary, immediate shot of momentum that creates dividends for him, pays dividends for him. And it's a little advanced. All right, and Morgan, these two go together, so I'll just grab both of them. Oh, we already saw this one, right? There's your entry, beautiful. And then there's the result. We just looked at those. Did you post them twice, or did I just click on them? I may have gotten ahead of myself. And then Malcolm, we answered your question about the synthetics, JW. There's that momentum phase again, right? Bars outside, capitalizes. Bars outside, capitalizes. Bars outside, capitalizes. JW putting on a clinic on momentum today. I love this look, guys. Creates a lot of opportunity. Fun 15 minutes, I bet. And the cool thing is you're on the right side every time. And if you do that, if you literally say to yourself, man, I'm going to put myself on the right side of these trigger lines every time, it's hard to stop that market. And you know exactly what it looks like when it starts to slow down. All right, Jonathan. Let's take a look. And I'm going to go through each one. So, fib tops. So, directly into a termination conditions. Does that make sense? I've got red fibs and all the triggers below. Red fibs and all the triggers below. Gap is not an issue on my small chart, not at all. Let's start with that one right there. Does that make sense? The gap is a large chart thing. Gap is a large chart looking for that huge gap in between. But what I want you to see here is if we go through and we just talk rules, Jonathan, this is odds favorable momentum and this is odds favorable momentum. And why is it? Because both small and large triggers are wide, whoops, and in direction of the trend. And this is the key to odds favorable momentum, guys. Both triggers are wide and angled in the direction of the trend. That's that look of strength. Do you see how the large triggers here, they're trying to roll, but they haven't gotten wide yet? Not the best look for momentum. It's that immediate momentum, but maybe not odds favorable yet. And then here we trade directly into resistance and absolutely no triggers break, and that's a textbook termination condition. And then when we talk about entries, areas inside of triggers, well, one of your triggers is still red and flat down here. The triggers don't even agree yet. This is recognizing a market that's turning. This is just a little bit before the advantages come together for you. I don't know that I would spend money on that entry. I'm just giving away too much in the moment. It's a great chart. And you're right, you're trading with those strong triggers, you're looking for direction, and you're nailing your entries. And we're just going to keep refining just a little bit to get you where you need to be. And then John 20, you saw momentum. Whoop, let me get back and read that. I just totally scrolled off of it. You saw the momentum and reacted. So let's see what that means. Let me see where you got in at 78.75. So you got in right here. And so let's do two things, John 20. The first thing we're going to do is we're going to say your large chart was a term and weak triggers and a termination, and there was tons of stuff wrong with the large chart. But let's back up. Even into the trouble, your large triggers never blink, suggesting more up. I do like that look. And let's draw a line on your small triggers on the small chart. And John 20, do me a favor, give me a Y in the room if you're with me in here. And everybody give me a Y in the room. Do you see what side of those small triggers he's on with all that momentum? And do you notice that the market didn't slow down until he got to the other side of it? Are you guys starting to see a pattern here? This is something I would go take pictures of. This is the ability to recognize when you have a short-term advantage. And maybe a little beginner's luck, John 20, but beginner's luck with enough happiness and skill splattered into it that this becomes repeatable. You are above support, and all the triggers are above support. All your triggers are green. Everything suggests more up. And you take the best momentum look ever, and you're able to capitalize on it. And I'm going to say without hesitation that while it's not a high probability trend trade, it's an outstanding use of the indicators. Should have been in at the mid-band. Early entry, there's that gold temperamental. You still got paid though, Paul. Nicely done. And then in a strong trending market, keep trading the mid-band until it doesn't work. I love it. Keep trading the mid-band until it doesn't work in a strong trending market. Paul, nice job. That's a little experience, taking those lessons. Erla, man, I love this. Oh, you're welcome, John 20. Thanks for posting, man. Erla says, you know what? There's got to be a dead horse we can beat. I'm going to draw a line on the small triggers. And Erla, I got to tell you, you have probably done one of the best jobs of really capitalizing on this one that I've seen in a while. You have odds favorable on this chart, so you just ride it up. And here's the brilliant part. You don't mess around. When it starts getting to the wrong side, you're like, see ya. And Erla understands that with this look and no terminations, it's just probably going to end up a trend trade. And that's exactly what it did. You got in a little early, you had to suffer just a little bit, but you let your momentum trade blossom into a trend trade to catch the rest of the move up to fibs. Freaking amazing, guys. If you're a trend trader or a momentum trader, if you're looking to really capitalize on this trade, steal Erla's picture and go find 100 pictures of that look. And you'll be like, oh my gosh, there's some money to be made in these markets. And when a momentum trade fails, when the large chart says go, it just turns into a trend trade. Paul knows that. Beautiful trade, Paul. GWC says, I know trend trades. GWC, are you in here, my friend? I want to make sure you're listening. Not my business to tell you how to set up your charts, but did you notice that you don't have synthetic triggers on your entry chart? That the only trigger line you have is the large trigger. You're missing your synthetic trigger. And I think that synthetic trigger creates a pretty good advantage because it really helps define where the market is most likely to continue. And Paul's entry is at the area right inside of the trigger. And yours is a little nerve-wracking on the wrong side. So you might want to right-click and set up the correct template. At least give yourself those advantages. And then everything says up, and it just pulls right back to a mid-band and continues up, and you get paid, and that's beautiful trading, GWC. And then Jen says, if the boys can do it, strong bottom. Well, high workout. Odds favorable. No divergence on a 50-50. Perfect entry. Let's get out at fibs. Jen, absolutely beautiful. Your patience has been off the chart. Yes. Morgan, the answer is yes. Let's go through it, man. Son of a gun. So Morgan, we're going to go through entries real quick. And this almost goes back to giving numbers power, right? This almost goes back to saying that this number is better than that number is better than this number. But the reality is that we're using both. I want you to write this down, everybody. Favorable large triggers. Favorable large triggers means that the large triggers and the synthetic triggers. So Morgan, the smooth one is the large, the stepped one is the synthetic. Your best look is when they're overlapping, when they're one on top of the other. That's what we call favorable large triggers. Why is that your best look? Well, I'm going to change this right here. On the small chart, the laws of moving averages suggest price will return to the slower, man, I'm struggling, large trigger. On the large chart, the laws of moving averages suggest price will return to the slower large trigger. price is the same on both charts. So if I have large triggers from both charts in the same location, my anticipation, let's do this. The area I expect to return to is the absolute tightest, smallest, most concise area I could ever have. When I put a line inside, it has something to try not to do any errors, something to bounce. Does that make sense, Morgan? So on the large chart, I expect price to return to the large trigger. It's the laws of moving averages. I expect price to come back inside of these large triggers. That's it. I expect price to get back inside of these large triggers, somewhere inside of them. So if I take those large triggers and I overlap them with the large triggers here, then I have the absolute smallest potential correction point. But when they fall apart, right, when they split a little bit, if there's lines here and here and in here, then it's less precise. So favorable large triggers is a huge advantage, because what it does is it overlaps the correction point and then you give it something to bounce off of. That's the easiest way to take a trade, Morgan. So you're using both. Awesome. Thank you for asking the question. Will there be times where it makes sense where it doesn't matter, right? So maybe, and I'll show you up here, your small chart, large triggers, are more likely to get out of whack before the large, right? So your small chart are likely to separate, either above or below. And at this point, when I have split triggers, let me pull up a picture from the spreadsheet real quick. I love this lesson. I think it's a great lesson. When I have split triggers and two correction points, Morgan, I will almost always wait for the synthetics because the large chart leads the way. And if I don't wait for the synthetics, I have to have some sort of confirmation, like a reversal bar or something. But usually, I'm just waiting for the synthetics. I'm looking for a reason off of that. Unless, of course, I have the best top in the world and the strongest triggers in the world, and only my lines are inside of the small chart, then it makes sense with all that momentum from that great termination. And you'll kind of get that with reps a little bit. But the tighter they are, the easier it is for you guys. But we use both. Price could go to either. And what that means is that it can run over this one and go to that one. And that's exactly what happened here. So, great question. Guys, these are the questions that change the whole dynamic of the class. When you ask questions like that, everything gets easier. Everything makes, it just works. And then, Jonathan, this is the same talk, right? Guys, I always encourage you and maybe even warn you a little bit. Don't ever say the market should, the market will, the market has to. Market never has to do jack squat for any of us, guys. Remember, we're not in control. But Jonathan, were you listening for the on the correction point talk about how price likes to come back to large triggers? Here's one right? And then here's my other one down there, and that's a big correction point. And I told Morgan there'll be a time where you might think that this is your best bet. And typically, that's when a strong bottom, when this reverses the market, these areas are less likely to hold. And you're likely to get a shot here, but you got to manage aggressively because it still has the potential to push all the way down to this trigger. Does that make sense? But the reality is I don't have any expectations of it breaking this area. I don't have any triggers through that area. Hell, I don't have any triggers through this area. So at this point, I'm at a zero loss as quickly as I possibly can because these triggers are down and these triggers are down and this area has the potential to hold. You're taking an aggressive long into an area that's behaving as a termination condition. Get paid quick on these because they tend to fizzle out just as quick. I hope that makes sense. And then Zorro says split triggers. Oh, you're okay, Keenan. Had to have your workspace rebuilt. Did you get it taken care of? Zorro, awesome. You're making my life hard, Zorro. 836. So I think this was this one? Maybe? Awesome. Do that every time, Jonathan. Do that every time. And go back and take whatever I say and annotate your chart again. Please do that, guys. If you think you see a trade, you're not sure, drop it in the room. We'll talk about it the same way we did that. I love that because it creates great lessons for you guys. It looks like you had a termination, odds favorable, not a clear path, no divergence, and you get in just below the midband. And it bounces, right? It goes up to those synthetics. And then it comes down and you get paid because you understand split triggers. Nice one, Zorro. I wonder how much stress you could take out of your trading if you never put any fibs on the large chart. What if I circle tails without knowing whether or not there's a termination condition? Would I be more inclined to take these trades with that level of momentum? What do you guys think? That's kind of cool, right? Would I be more apt with this look of momentum, not knowing, taking a pull back to the midband right there? Trick your brain a little bit, guys. Go back and do it like this. Learn to trust momentum. No ES trades for you today. Just don't see a look on the large chart. Gap between small and large. And then straight into terminations, right, Jen? And it's still not working. I love it. Loss of momentum on small chart, but once price exceeds divergence area. Not price, Pedro. Let's do this, and this will make it pretty easy on you. I know you're good that when the small and the large clear an area, triggers. Always use the triggers. So this is such a great lesson. Thank you for posting this. When the small and the large get above that divergence, it's in my rear view mirror. And here it's kind of 50-50. So you've only got one divergence in play. And you've got an awesome look here. I love this trade. Nicely done. That's a great looking trade. Yeah, you were spot on. And then there's those split triggers again, right? And sure enough, it comes back to the synthetics right at the areas. Patterns all over the place. Ended up getting both targets. Beautiful trade, man. Really nice. That would have been a harder one to catch, I think. All right, guys, I'm going to take 5. Um, do the same. Go stretch for a second. Go relax your brains. Um, grab a glass of water. Eat a Twinkie. I don't know. They still make Twinkies? I'll be back in about 5 minutes. When I come back, we're through every picture that's been posted. I think we've been able to answer every question. Think up some questions. Let's play Stump the Teacher. That'll be fun. I think I'm going to take a break, Jonathan, but we will start with your picture when I get back. I'll be back in about 5 minutes, guys. What do you say we get back into it? And Jonathan, I love the what you think. Let's turn. I want you to do something for me. Asking, please. Let's turn what do you think into here's what I think. What do you think? Um, and I'm gonna put this back on you, Jonathan. Why? Why? And you may or may not be doing this, but what a lot of people are gonna do, guys, is they're looking for trades. They're looking for trades. They're looking for entries. They're looking for reasons to be in the market. So I have to look at this, and first of all, let me line it up. 1055, 1055. So at 1055, my trend is still up. My large triggers are still up. I'm pretty sure my path is clear. So there's a lot of things going on. On the small chart, I've got 4 divergences, which I like. My large triggers are rolling. And you're thinking maybe I just jump in right here with that divergence. Am I reading it right so far, what you're thinking? Because this is all I'm thinking. I'm thinking weak triggers, smalls are trying to roll, multiple divergences. And then let's just go back to the same lesson over and over. When your large chart says, hey, we're winding up for a retracement. When your small chart has 3 or more divergences in the same location, when that final divergence is lower, when those triggers are weak, right? That is 3 divergences may terminate a trend. And then the same lesson that we've talked about 20 times today. After 3 divergences, there's your small triggers. Which means that you're in the best of the best momentum phase on those small triggers, which means that if you decided to get in right there on that little snapback, right at the mid band, right at those super fast strong triggers, and said to yourself, let me get out at Fibonacci support, I love it, Jonathan. I love everything about it. But there's a lot of factors. It's weak triggers. Anything can happen, right? We know that that can precede a reversal. 3 divergences in the same price range, well, that kind of confirms that that potential reversal or at least big retracement is happening. And then odds favorable momentum on the momentum phase after 3 divergences with weak triggers and room to get back to trouble. Beautiful. That's a JW trade. JW, are you working with JC? It's the battle of the J's here. I like it. So that's my read. Is it a high probability trend trade? No. Is it great chart reading, turning it into some money? Well, I don't know. You're in at 93. We'll call it 93.5. And what is this? Is this gold? This is gold. So you are up $320 directly into trouble. $320 directly into trouble, and you get a close on the wrong side. Cav, take care of those small triggers. Jonathan, I have to ask, are you pissed about $300 in 42 seconds of your life? This is, man, this creates troubles for new users, because watch this. Let me show you what I mean. Can we all agree? Can we all agree that if I hit Fibonacci resistance with weak triggers, or all my triggers are below. Can everybody agree that this is a point that may stop the market? This is an area that could create a bounce. This is an area that could stop everything and make it reverse. And if you don't know, well, it did it there, and it did it there, and it did it there, right? And it did it here and here and here and here and here, and it did it again there. So when I get to this area right here, and I say to myself, the only thing that I'm sure of is that this has the potential to stop the market. And I'm already up $250, and I have to make a choice. Am I going to hope that it breaks, or am I just going to get paid and wait for the next opportunity? If you hope that it breaks, more often than not, it seems to do this. Oh, shit, right? But if you exit at 78.17 and it does this, what happens is now you hold at 78.44. And look where the market's trading. So what we're doing, guys, is we're not trading what we hope happens. We're trading what our indicators say. And weakening triggers at fibs is a good reason to take an exit. But the hardest thing is you have to be okay with everything that happens after your exit. You have to be all right with the idea that you had a reason, that your plan says that this is your reason. So, Andy, if you took the first pullback, right, by the time you get up here, get paid. Same thing here, clear path, split triggers. Notice how it comes back to the synthetics. Two opportunities to capitalize. First is 50-50, second is odds is clear path. 50-50 with no divergence is still an entry. Odds favorable clear path with one divergence doesn't scare me in the least bit. So Jonathan, you'll get to a point. Awesome. You'll get to a point, and guys, I'm going to show you exactly how this is probably going to work for everybody in this room. Is Jonathan, you're going to be on 4 contracts right here. And you're going to take 3 of them off right here at trouble. And you're going to say, wait a minute, trouble's breaking. And you're just going to add the 3 back on. And you're going to say, you know what, everything's still going. I got to the other side of trouble. Life is good. My rules are met. Let me put them back on. And then you're going to get to this area. And you're going to take 3 off, right? And you're going to say, all right, let me get paid again. I'm going to leave 1 as a runner. And maybe your rules are met, maybe they're not, but you've got that runner, right? And then when you get up here and it's anything can happen triggers, you're like, all right, I'm going to take it off. I'm going to get paid on that final one. And it's amazing how people make money on this. If Andy enters right here, maybe he gets paid right here, takes a contract off, and he says, hold it, I can put that contract back on. And then he takes it off here, and then he puts it back on here. And guys, you have the freedom to do that. Every trade doesn't have to be a home run. Every trade doesn't have to be a $10,000 trade. Every trade doesn't have to be that one. Keep one on for the runner. If your large chart says that it has the potential to break areas, give it a shot. And guys, this is part of developing a management plan over time. But the idea of trading is to get paid. I say that every day. The idea of trading is to put money in the bank, guys. So there's a distinct difference. Can we all agree that this look, damn it, I'm killing my charts again. Guys, don't draw and drag on your charts. It destroys them. I know this and I do it anyway because I'm a Yahoo. Let me get this back up real quick. I'm going to go through and do a quick clean out. Sorry, guys. I do all the things that I know I'm not supposed to do because I believe that rules don't apply to me. That's my fault. So what happens is now we can start making decisions, Jonathan, of what we're going to do with that second contract, and we can do it based on the large chart look. So can we all agree that with that much momentum, this area is more likely to break than this area? Just momentum. And this area is more likely to break than this area. And see how momentum keeps declining? So like this area, I'm giddy up. I might hold through it. This area, I'm still like odds favorable momentum. Let's see if we get to the next fib. This area, I'm like, ooh, I'm slowing down. I need some in the bank. Into band. And then this area, I'm like, well, crap, that's anything can happen. I'm out. This is where you will get. This is where you turn base hits into home runs, guys. By being able to piece together momentum, by looking at what areas you're getting into and what the trigger lines are telling you at those areas. And Andy, just like we talked about, here I might hold all my contracts. Here I might take half of them off. Here I might take the rest of them off. And it doesn't mean that I can't find re-entries on the way up. And management is a big thing, guys. But even without fibs, and this is just a little synthetic drawn-in fib for a lesson. Anything can happen, triggers, and look at the push down. Let's do a quick just trust momentum. Anything can happen. That's what preceded the deeper retracement. That's what preceded the push down. Anything can happen. Is this a pattern that we can recognize and begin to trust? And guys, this was dancing around areas. Triggers don't line up, right? They don't match. Wrong side. Transition phase. I don't have gold up, Jonathan. Show me a picture. And then on that same token, can't we start to trust this look if we just scroll back? Odds favorable tails. Odds favorable tails. Odds favorable tail. Tails. Tails. Holy smokes. Odds favorable tails. 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 We're developing trust in a simple look. And you guys are going to learn how to capitalize. And there's a reason that I talk about momentum, right? There's a reason that I say, make sure that momentum is good. Make sure that you're sticking to momentum. Momentum is the advantage that I never want to do without, because momentum pushes markets, because momentum breaks things, because momentum creates an advantage that even covers mistakes that I might make. That is definitely gold. Yep. What do you see, Jonathan? I'm going to bug you because I'm going to start turning it around on you. What do you see? I see a lot of momentum. I see an area with the potential to break, but it's not broken. 73, 95, 70. $23. 73, 95, 2. What's the significance? Let me look. So what you're telling me is that you're looking up here for a potential entry, or are you curious about it over here, or maybe that one? Because we've hit it 3 times already. Right here at 92. This is why annotation pays dividends, guys. And I'm not trying to be difficult. I promise that I'm not trying to be difficult. Were you looking here? Were you looking here? Are you looking here? One, two, or three. Now, how could I possibly guess that? How could I have possibly guessed that? No worries. So let's look at it. Coming in on 2. Larger down, but the smaller up, right? A little indiscretion there. Can we agree? Let's get all these off of here so we know where we're focused. So let's just go through the basics. Larger down without a doubt, but my smalls are coming up. So a little kind of uncertainty, if you will. And then I do have a clear path, without a doubt. Everything is below that area. So on the large chart, whoops, sorry. Jonathan, I'm with you 100%. This suggests that this area is likely to hold if I get a pullback, right? Is that where we're at so far? You're pretty good with that? And I'm telling you, this is how my brain works every trade that I take, is I start talking through it. I start with momentum. And then once I talk about momentum, I start talking about whether or not I have a clear path. And then once I talk about whether or not I have a clear path, the only thing left for me to do is to go to the smaller, faster chart and say, the large chart looks like I should look for an entry. Let me see what the small chart's telling me. And this is where it changes a little bit, Jonathan. So the first thing I notice is a little bit of divergence, but that doesn't worry me too terribly much. I'm not scared of one divergence in an odds favorable momentum clear path kind of scenario. What does give me a little bit of concern is that my small triggers are on the wrong side of my large triggers. So this says to me, man, I'm already past the first correction point. And that's a little problematic. Not necessarily a deal breaker, but a little problematic. So I've got a correction point here, and then up here, I've got those split triggers, and I do have resistance, and it's right inside of favorable large triggers. And you're saying with this look, right about there, let's go short, right? Everything looks good. The only area inside of a trigger line is right there. And you're saying, well, hell yeah, I'll go short. Did I get it right? That's how I read it, 100%. I see a lot of momentum and I see a clear path. I do see split triggers, which I don't care for, but I've got a line and it lines up with this one, and I'm like, man, that's probably the spot, right? So Jonathan, if you took a short at that fib, you could justify it. You got run over and lost, but you could justify it. You could make a case for it. I can make a case for it. I could convince you without question that that's the right trade for you to take. I would be more inclined to say where the triggers are a little bit tighter, where the momentum is a little bit better, even on a 50-50 with no divergence. I like that one. You want to get in over here? See, Jonathan, you're making me guess too much. Could you believe the dinner I had last night? Oh, it has been a little slow lately. You're making me guess a lot, Jonathan. No, you're cool. It's I'm not mad about it at all. But it's a great example of where you annotating charts helps. Instead of just giving me a chart and saying, what do you think? Because you said look at gold, and this happened at 11:17, and this happened at 11:25. And so are you saying, and let me see, now I have to guess again, that you wouldn't have taken a short here? You would have waited for everything to start down and maybe looked for an opportunity on that momentum phase? There we go. So, Jonathan, I'm going to need your ring size because you and I are married. You're making me read your freaking mind. But I like it. I love everything about it. Why? Because every trigger rolled. Because you're in that momentum phase. Because there's nothing in your way. Because the large chart says down. Jonathan, I'm not sure that your trade is the high probability trend trade. I have a feeling you're going to find yourself one of those momentum traders. My wife's going to be pissed that you and I are going steady now, but that's okay. We're going to work through that. But that's awesome. We always get there, guys. We always get there. Um, and Jonathan, what's going to happen too is you and I are going to spend another couple weeks together, and I'm going to be able to read your mind, but you're still so new right now that I don't have it just yet. Yeah, momentum is more obvious. I'm telling you, there's a reason it's rule number one. Um, there's a reason that momentum is rule number one, guys. There's a reason that momentum pushes and everything. And once you get good at momentum here, that was the wrong one. Once you get good at momentum here and momentum here, then you start to understand that momentum is just momentum. And it really doesn't change. It's smalls outside are great, and there's stages. Let's do this, man, Jonathan. Let's use this picture. I love this. There's stages, right? All the bars outside of the smalls is amazing everywhere, and that dies off a little bit. But all the bars outside of the large, this is your trend trade momentum. And then when they get to the wrong side of everything, that trend trade momentum is gone. Does that make sense? Nobody can tell what size chart this is. When I'm outside of the smalls, it's good. When I'm outside of the large, it's still all right. And when I get to the wrong side, cue the sad trombone, ladies and gentlemen. Wah, wah. Down it goes. I think that we may have just discovered an easier way to teach the software. Ah, where did my charts go? I don't even have a workspace open. I got a NinjaTrader open over here and no charts open. Let me see if I have John Novak's pictures for the momentum phase. Because he had a really good one that kind of went through it, and it was a very simple picture. Believe it or not, for John Novak, it was a very simple picture. Let me see if I can find it real quick. I'm not sure where it's at. I'll find it eventually. But there was one. Maybe this was it. Nope, that wasn't it. I'll find it. There's one that discusses the momentum phase. Mind reading would be so much easier, wouldn't it? But you see it over and over, guys. You see small, so bars outside of the smalls is the fast momentum phase. Bars outside of the large is the slower, longer term momentum phase. And then, guys, every reversal has bars on the wrong side of the triggers. You can't reverse the market without getting to the wrong side of the triggers. It's kind of cool. So if I'm in a short trade right here, using just this chart, the quick momentum phase is done right here. And then the long-term momentum phase is done right here. And the same is true on the smaller, faster chart. That's kind of cool, guys. I think I just had an aha moment. I don't believe you. Show me the picture and annotate it. I think you're making stuff up to sound cool, Jonathan. Kenan, have a good one, man. Thank you for being here today. We got to stop letting work distract you and problems, right? Software. Let's see what Jen did real quick. Jen says, when I reach a termination condition, none of the triggers are through, 3 divergences on the small chart. I'm not doing a darn thing. I'm not going long and I'm not going short. I'm not taking a trade into a termination condition, and I'm not going short into a termination condition. I'm going to sit on my hands and do nothing. Seems like a lovely time for a spot of tea. Happy hour soon. Atta girl. I'll turn the webcam on for happy hour next time. It's amazing. The more you drink, the cuter I get. It's a lot of fun. Mark, you ever seen anyone keep their stop above a 13? Yes. Yes, I have, Paul. But above a 13.2 reversal bar markers is kind of an arbitrary stop. But I've seen people do it, saying I won't get out until the 13.2 gives me a reversal bar. I think John's wife does that. Lenny, odds favorable. I have no idea where that market's coming from. You don't have a clear path. You do have divergence. And you missed the mid-band. And then you jumped in, and then you panicked. You didn't manage out, Lenny. You jumped the hell out. Does that make sense? You said, oh, shnikes. I better get out of this one. What made you do that? Was it because you realized you were trading into areas? Was it because the triggers were split? Was it because of odds favorable momentum on every chart? You have to ask yourself these questions. You have to say to yourself, man, why? Why did I exit? What got me out? Because that's the difference between 3 ticks and 13 ticks, right? That's the difference between $30 and $130. Getting in, I like that you waited for confirmation, but there's no reason to blink, Lenny. No reason to question any of life's choices until it gives you a reason. Where's your picture? And it never gave you a reason. You'd already identified trouble. Everything was down. Everything was strong. Until you hit 93, brother, you got to hold your water. And you want to see, I had this realization too. If you let fear override your sim account, Lenny, let me show you something real quick.
Order filled. Order filled.
I'm down $2,800, Lenny. It's pretend money.
Order filled.
Whoops. Let's do this again. Well, are you going to be that scared with real money? So, and man, I'm telling you right now, I'm not knocking you at all. So how do we develop trust, Lenny? Oh, what a great segue. Let me find this real quick. So things you have to know. And knowing them isn't enough, guys. You've got to commit to them. You have to know your rules for entry, Lenny. So you have to know exactly what it takes to get you into the market. 100%. You've got to be so comfortable with it that the only thing that'll keep you out of the market is your rules not being met. And if you have rules met, wild freaking horses couldn't keep you from taking that trade. Why is that? It's because your rules have been proven, tested. You've gone back. Lenny, you have 300 and plus freaking examples of rules to help you develop trust. Skittish comes from not having trust. Skittish comes from trying to be a trader, not a rule follower, not a chart reader. And you have to know what your management rules are for the trade that you're in. If it's a 50-50 trade, you have to know how you're going to manage it. If it's a momentum trade, you have to know how you're going to manage it. And guys, you have to have these insanely rigid rules for entry and for exit. And having them is one thing. You've got to trust them. You've got to trust the rules for entry. You've got to trust your management plan. And you've got to not be flexible. You have to say to yourself, this is exactly what it's going to take to get me into the market. And the only way, Lenny, that I'm going to exit this trade is if I get another divergence. And if it doesn't give me another divergence, I'm going to hold it until my first target. And then once my first target's hit, the only way I'm going to get out of this trade is if all this momentum carries me to my second target. And this is my plan. And I'm not saying that this is your plan. I got a reversal bar. The only thing I'm going to do is put it 2 ticks above it. I have 4 ticks of risk, Lenny. And now what I have to do for the entirety of this trade, what's changed? Since the time I entered, what's changed? Nothing. The market started to move down. Has it given me divergence to the upside? No. Has it? I don't know. It just hasn't done anything. It's just sitting there, right? So I start talking through my head. What are my exit conditions? Well, my exit conditions is a second higher divergence. So until I get a second higher divergence, I'm sitting on my hands. There's absolutely nothing for me to do. If I want to put my hand somewhere, I'll put it over the close button if divergence is true. But if it doesn't print, I am obligated per my plan to not do a damn thing. Does that make sense? And Lenny, here's one of the cool things. If your plan says take $100, and if you hit that $100, go to break even, now you're even braver. Because now I've got money in the bank and I have 0 risk on the trade. Hell, go fix a sandwich. Let it play out. And we're going to let this one play out, guys. And we'll put the second one at 200, which is still before even the first sign of trouble. And we're just going to let this one play out. And Lenny, this is the beauty of sim. If my entry is correct and everything becomes a series of if-then, then I'm talking myself out of making emotional decisions. Because watch, and they're really slow right now. Watch nothing but this number. If that's all you watch, it'll scare the hell out of you. It's 20, it's 30, it's 20, it's 30. Oh my gosh. Oh, it's 20 again. I'm losing money. Nope, it's 30. I'm making money. Oh, it's 40. Look at me go. Woohoo! It moved 2 ticks. Oh, now it's 50. Holy crap. 60, I'm buying a boat. Oh no, 50 again. This stinks. No, it's 60 again. And guys, I'm being silly for effect here. But do you see how easy it is to get emotionally attached to a tick? How easy it is to get emotionally attached to a stupid green or red number? Do I still have odds favorable momentum, ladies and gentlemen? Give me a Y or an N in the room. Do I still have the best momentum look ever? Hell yeah, I do. Do I still have the potential to break this area? Absolutely, I do. Am I still in at the right spot? And look at this. If I get a third divergence, I'll exit the trade, which means that my new stop is 2 ticks above the reversal bar. And it's either going to pay me or it's not. But Lenny, how easy would it have been to jump ship when it was hovering between 30 and 50? It's just simulator, guys. Let simulator do what simulator does. Let it play out. Let it play out. So Lenny, you've got to train yourself. Take your damn hands off the mouse. It'll make your life so much easier. It really will. It'll make life 1,000 times less stressful if you just let it play out. And then post in class, because Lenny, if we'll talk about it, right? We'll go through this. What changed? What didn't change? Hell, what if you're holding for the fib, right? Has anything changed on the large chart to make me believe I'm not going to hit this fib? Nothing. Nothing's changed on the small chart. My small triggers are angled down now. I love that. But here come the fluctuations again. You're welcome. And then Jonathan, I'm trying to open your chart and it's not letting me. Guys, give me 1 second. I've got to do the old Discord shutdown with my task manager so that I can get back and get the room going. Almost back, guys. Sorry. Hopefully you can hear me. Don't need the camera. All right, let me unmute. Let me get my screen. Everybody with me? Can you see me? We're all good? Check it out, Lenny. Even with those silly fluctuations, it made it to 200. Nothing's changed. It's just gotten better and better and better. This is my trouble spot. So if I get divergence from here, maybe I exit the trade. Everything said down, and you take the pullback, and it ripped right through. 2390, Jonathan, was your first trouble. All the way down here. This is small chart nonsense. Large chart said we're going to 2390, and it got there. Great job, dude. And then when it got there, look what the market did. No reason for a long trade. I don't think gutsy's the word. I think this is letting simulator balls overrun your brain. Guys, want to see something cool? Nothing still has changed on my large chart to suggest that I need to get out. Nothing has changed on my small chart to suggest that I need to get out. Does that make sense, everybody? Split triggers, that's ugly. Went right to the synthetic. There's your confirmation bar. I got in a little higher. What do you guys think? We're at our trouble spot, right? Can we expect some fluctuations? I think we could. I would say a third divergence is a reason for an exit. But if we never get that third divergence, guys, is there any reason to jump ship? What does your plan say? So Lenny, and this is for everybody that finds themselves on that emotional roller coaster, I want you to do me a favor. Take whatever entries you want, right? But if you're on simulator, hold for $100 no matter what. Hold for $100 no matter what. Get used to winning. Because all you're doing right now, Lenny, is you're getting used to getting the hell out when there's no reason to get the hell out. Well, Paul, what if you get 3 divergences on a smaller, faster chart? Isn't that a termination condition? You would still hold for the long haul? That's fair. What if the large chart hits this fib, but it still has odds favorable momentum? Like it did right there. You would stay in and just hold it? All right. Everybody's plan is going to be different, right? Everybody's plan is going to be different. That's the cool thing. Let me know what your plan is. I'll hold you accountable to it. Let me know what your rules are. I'll hold you accountable to it. I love momentum, though. We're going to do the Paul Flowers plan. As long as that large chart is screaming, guys, let's see how much money we can make. We still have to play the 3 divergences in the same price range, though. For you guys that don't know that, 2 ticks above this reversal bar, you're going to know if divergence is true or not. So there's no reason to keep your stop all the way up here and say if divergence prints, I'll exit. Hell no. 2 ticks. 1, 2. You'll know. And if you can't hit close fast enough, you'll do it. Man, Mark Douglas, he helps me. I listen to him all the time. You guys, my favorite Mark Douglas phrase, my absolute favorite Mark Douglas phrase is when you stopped expecting to win every trade, you start winning most of your trades. When you don't care about the result, but rather the execution, because the execution has been proven to win more than it loses, well, then you're solid, guys. There is on YouTube some great Mark Douglas stuff. There's some awesome videos, all that stuff. Go look at it. You guys notice how there's no reason to get out? I reached this blue line, but there's just no reason. My smalls are down, my large are rolling, my synthetics are down. Everything says this market's more likely to go down than up in the moment. So that's what I'm going to embrace.